Proud supporters of Africa this week. Engine, with us, you are number one.
Welcome back to Africa This Week. Global beer brewer SABMiller launched its first ever cassava-based beer. This is seen in the affordable beer category aimed at cracking the untapped homebrew market in southern Africa. Lerato Mbele spoke with Jerry van den Houten, SABMiller Africa Supply Chain and Enterprise Development Director, who led SABMiller's development effort on cassava beer.
The product that we're making is in fact very different to what you would normally see in the traditional market. So we're not actually competing in fact with the traditional homebrew. It's very much a clear lager brew. It's a new raw material in that sense, and we're really aiming this particular product at the informal spirit market in sub-Saharan Africa. Which for us is an untapped market. It's a big growth opportunity for us, and we're extremely excited about it.
Okay, well, cassava brew, somebody's asking themselves right now, what does that taste like?
This particular product, Impala Lager, which we launched in Mozambique today, it's a standard lager beer. It looks exactly like a normal lager. It's clear, it has a head, it has its own profile. It's perhaps slightly more sour than the standard brew. Not in that sense, but we think that will very much appeal to the consumers that we're aiming at.
Okay, cassava obviously is a staple root that we find in Africa, so it should make production cheaper. You know, as you avoid sort of the volatility we've seen in wheat prices that have affected your input costs. But does it necessarily translate into a cheaper production?
It's a slightly lower cost. It's a very different raw material to let's say, in fact, maize. In fact, for example, it's the biggest crop in Africa, but it's the least sort of commercial crop in Africa. It's mostly farmed by subsistence farmers, and these subsistence farmers are really partners in this particular enterprise, in fact, for us. So we have taken costs out. We are also, in fact, very much in partnership, in fact, with the Mozambique government. The market that we're aiming at is a non-excise market, whereas we will be paying excise on this product, but at a lower rate than we would normally pay for, in fact, a standard lager. So we've made it very affordable for the consumer.
So you seem to have taken a developmental approach here, saying that you want to work with subsistence farmers, so trying to commercialize them a little bit in terms of how they farm cassava. You're working with the Mozambican government, and I think there's a local partner as well in Mozambique. Tell us about that relationship.
Yes, the technology that we're using was in fact developed by a Dutch company called Datco, who we are partnering with, and it's quite a revolutionary technology in the sense that it's very much a mobile technology. So the standard technology would be to do this in a large standalone commercial plant. This particular technology allows us to actually go into the farming areas, and it overcomes two main problems that are normally associated with, in fact, cassava. The one is that it is a high water content, and therefore you can't really transport it over large distances. And secondly, when you harvest it, you have to use it, in fact, within 24 hours. So that's allowed us to basically do what we've done.
The commercial viability of all of this, you're expecting that with its takeoff, it should account for about 10% of your beer sales in a market like Mozambique. If it takes off into the rest of the region, how are you expecting to perform?
Yes, the Mozambique operation is very much a pilot for us. It's a full-scale, in fact, commercial pilot, and we hope to prove the whole model there, including the farming model as well as the beer in the marketplace. And certainly if it is successful, we will obviously want to roll that out to the other markets that we are in Africa.
Many brewers want an element of local content as they come into Africa, something that speaks to the local consumer, that they can relate to, that's affordable at cost level, all those kinds of things. But there's sense in it, I think, ideologically, but is there sense in it financially? Where has it worked? Who else is doing something like this?
Yes, look, for us this is very much a business enterprise, and I think we're in a happy situation that this is a business for us, but it has very good, if you like, socio-economic spin-offs. So we're able to do this in partnership with smallholder farmers, and I think we'll make a major contribution to the sort of agricultural development in Africa. But at the end of the day, it's a profitable line, in fact, for us, and that ensures that it is a a sustainable venture going forward.
I mean, SABMiller, I mean, you're renowned for going where others fear to tread, going into countries like southern Sudan, when we weren't even sure if it would ever be an independent country, where apparently there's only like 100 kilometers of tarred road. I don't know how true those anecdotes are. True. But you go in there seeing the potential where others don't see it. And then how do you thrive?
Well, we put a brewery into southern Sudan probably about 3 years ago, and as you said, that was before it was an independent country. It's now the latest independent country. The cassava project, which we're doing in Mozambique, we will be following up in southern Sudan. There are a lot of people returning, in fact, to the land from the war situation, and they're looking at farming opportunities. And once again, I think that the local government there is very interested in what we're doing, and we will form a partnership with them, as well as with the other agencies who actually provide development to the farmers, etc. So we hope it's going to be successful, and we're fairly confident that it will be.
I mean, obviously also tapping into this whole notion of the new African consumer, the rising middle class, but we're also seeing so many of us bucking under the pressure of rising inflation and making decisions as to how to spend our money. And I know that people say that in good times and bad times, people will always drink, so you'll always have a market. But will people always drink a premier brand? Why would people buy Impala Lager, for instance, as opposed to brewing it at home?
Yes, as I said earlier on, this is not competing with the homebrew. The homebrew, I think, is a very different product. It's almost like a food type in fact product. So this is really competing with informal alcohol, and that informal alcohol is often of a fairly dubious quality. It has health hazards. People are killed, maimed, etc. So we're putting, in fact, a quality product into the marketplace at a very affordable price.
The Africa Carbon Exchange is an African marketplace for environmental commodities and derivatives designed to bring the benefits of carbon markets to Africa by addressing the prevailing barriers to low-carbon development in Africa. Lerato Mbele spoke with Tumi Charo, CEO of the Africa Carbon Exchange, from our Nairobi studios about carbon trading in Africa.
The Africa Carbon Exchange comes in to offer a solution for African project owners, especially to provide financing for two things: for the underlying project and for the carbon project component of projects like renewable energy projects, like hydro, wind, solar, even small projects like biogas. So the Africa Carbon Exchange is a platform that provides a lot of services to the African the project owners: finance, technical capacity, and linkages with to other service providers. And today we closed a major workshop, which was attended by big financial institutions like KfW of Germany, which today they said they can finance a carbon project, they can meet the cost of carbon development, which has been a major bottleneck to a lot of African project owners. A lot of African projects are stuck. Africa's share in the carbon business worldwide is a meager 3%. But now we are moving to solve that, to expand the share of Africa in the emerging carbon trading business.
All right, Suma, just tell us this. Are companies coming on to list and then raising funds in the traditional manner, or are you coming up with more innovative projects where even companies that are not listed or individuals that are just green conscious can also participate?
That is a good question. We are not a traditional stock exchange. We are a platform which provides all the developers with the solutions for their projects. We also know that in Africa we have small project owners. The small farmer who has 1 acre of trees. We are thinking of even the small farmer who has 1 biogas plant. We are thinking of the small household that has just bought an efficient cook stove or installed efficient bulbs. They can come to the exchange and be given services like where they can get experts to develop their projects, or how they can participate in schemes that allow for small carbon projects, known in carbon lingo as a program of activities. Programs of activities have been seen to offer a big opportunity for African households to access carbon finance. We don't list companies in the traditional way, but companies that have a renewable energy project, companies that have a forestry project, companies that have questions, they can come to the exchange and then we deal with their questions.
We talk about derivatives trading, carbon credits, those sort of very sophisticated tools that can be employed in high finance to make money. How would those work on the carbon exchange?
Yeah, the exchange was set up to trade carbon credits, but in Africa we have the lack of these carbon credits. So we have to be innovative. We cannot be like Blue Next. We cannot be like the European Union emissions trading scheme or these carbon exchanges in the developed world. We have to take the projects from the ground up, up to the point of getting carbon credits. Then we sell these carbon credits, and we can sell the credits in terms of spot or in forwards. And some of the buyers are ready to work with the project owners at the initial stages of the project, so that they can also finance the project to take off the ground. Because the main challenge in Africa is to have a good project take off the ground. And we appreciate that this is a problem, and as Africans, we have no option but to solve our own problems. The Africa Carbon Exchange is here to solve problems that are peculiarly African.
Global oil and gas exploration company Tullow Oil, headquartered in London, has identified exploration opportunities in East Africa. The potential for a new African oil region to the east could have profound implications for global supplies, not to mention those economies. Alicia Sekim spoke with Aidan Heavey, CEO of Tullow Oil, about the opportunities in the region.
We discovered oil in the Rift Basin in Uganda, and it was the first time that oil was discovered in East Africa, and the effect of that now has to open up a whole new industry. And the excitement in East Africa is both the oil and some recent big gas discoveries offshore Tanzania.
Of course, we've got 12 months of exploration in Uganda, crucial to the assessment of the reserves that you're actually looking at and the potential that you're looking at in that territory. But looking at the production targets you've put out there, 200,000 barrels of oil per day by 2015. That's double the target you've set out for 2012. It's very bullish. What are some of the potential challenges you face in actually hitting those targets?
You're looking at countries like Uganda, which is landlocked. You're looking at a country that's 1,200 kilometers away from the coastline. So the big challenges is the infrastructure, getting the facilities in place. We've massive challenges in getting local companies set up to service the industry, training programs. You know, even for example, food. We need to build a huge agricultural sector just to feed the staff that's required to develop all of these fields. So it's a major project.
Let's take a look then at getting the stuff out to the market out there, Aidan, because as you say, there's a lot of reliance with Uganda being a landlocked country on infrastructure at this stage. What's the status of things in that regard, and are you looking at making any investments here to make this even more commercially viable for Tullow Oil?
Yeah, I think the first stage of this project is to find out exactly how much oil is there. We've drilled them a lot of wells so far. We have found about 1.5 billion barrels of oil. But we've got about 12 months of appraising those discoveries to find out exactly what the real quantity is. And during that period of time, you will also assess what are the best development options for the oil. But, you know, and again, part of that whole process is we need to build up a whole infrastructure there. We need to make sure that we build local companies who can supply the oil industry. We need training programs in place to make sure that the Ugandans run the whole operation. You know, there's a major project. We need infrastructure projects, and then we need to sit down once we have all the fields developed and the plans in place to sit down with the government and decide on what are the best options, both in relation to refinery for a local product and maybe export of some of the oil. So it's a big project, and it's going to take a lot of time and a huge amount of investment.
So a lot depends on projects actually coming online, but on government approvals as well. What's your assessment of the regulatory environments that you're exposed to?
Well, I think this is a new industry for Uganda, and the Ugandans are working very hard to set up all the legal systems and all the procedures in place, and that will take time as well. And I think everybody just has to be patient, because this is a major project. It's one of the biggest projects ever in East Africa, and it's important it's done properly. So, I think all the companies just have to be patient and allow the country to get its systems in place.
Past lessons have been learned in terms of what governments actually reap and how. We've had resource nationalization, a very big theme right now. How are you working with governments on that basis and actually managing oil revenue, or is it still early days?
Well, I think the industry has changed with him a lot. Most of the projects today and the contracts that are between the oil companies and the governments are very much in favour of the government. So the bulk of the revenue in virtually all the modern contracts go to the government. For example, in Uganda, 80% of the revenue goes to the government. So, I think the contracts are now in favour of the governments, and what the challenge for the companies is to look at how big these projects are and how to attract investment. So political risk and attracting investment, especially in the current climate where financial markets are in turmoil. So it's important that the projects have a reasonable, fair rate of return, and it's a win-win for both the governments and the oil companies.
Well, that's all for this edition of Africa This Week. Join us again next week for another roundup of the top stories in Africa. From me, Mashudu Masuta, and the team, it's goodbye.